What's up everyone, it's Caddy with Money Vesting. So in this video, I wanted to go over the troubling news that's coming out of China with respect to Evergrande and of course their Chapter 15 bankruptcy that they have now filed in a court in New York. So that could also have an impact in the US markets, US economy. So I want to break all of that down in this video and go over some of the reasons as to why this is something that we need to obviously pay attention to. So hope you guys enjoy this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe if you want to get access to all the buy and sell alerts, options alerts, trade ideas, members only private videos, and the intrinsic value spreadsheets. Links are going to be down below for our Patreon and Discord, and there is a 16% annual discount available till the end of this month. So for a couple more weeks, it is available, and after that, it does expire. So this right here is the catalyst. If you go back here, Evergrande, once China's top developer, defaulted on its more than $300 billion in debt in 2021, becoming the poster child for China's property crisis. And Evergrande, as well as an affiliate, Tianji Holdings, filed for Chapter 15 bankruptcy protection in New York court on Thursday. This came out 5 hours ago. And this right here is the article from CNBC. China's property giant Evergrande files for bankruptcy protection in Manhattan court as well. I'll go over exactly what Chapter 15 bankruptcy is, because there's definitely different types of bankruptcy filings like Chapter 7, 11, 15, so on and so forth. So China's heavily indebted property giant Evergrande Group on Thursday filed for Chapter 15 bankruptcy protection in U.S. court. And in a filing to Manhattan Bankruptcy Court, the firm referenced restructuring proceedings in Hong Kong, the Cayman Islands, and the British Virgin Islands, and I'm sure in the US as well. And CNBC has reached out to Evergrande for the comment, but obviously they did not comment back. But the world's most indebted property developer defaulted in 2021 and announced an offshore debt restructuring program in March, and trading for Evergrande shares have been suspended since March of 2022. So it's been a little over a year. So Chapter 15 is a new chapter added to the bankruptcy court code by the Bankruptcy Abuse Prevention and CPA in 2005. And basically the purpose of this is to provide effective mechanisms of dealing with insolvency issues involving debtors, assets, claimants, and other parties of interest involving in more than one country. So since China is one of the biggest trading partners in the US, and Evergrande, definitely being the second largest developer in China, makes up for 2% of China's GDP, not to mention the entire property sector in China makes up over 30% of China's GDP, Chapter 15 is a more effective way to make sure that everything is structured well. And the general purpose is realized through 5 objectives specified in the statute, and that is going to be to promote cooperation between United States courts and the parties of interest, in this case obviously Evergrande and China, and the courts of other competent authorities of foreign countries involving cross-border insolvency cases, and to establish greater legal certainty for trade and investment, and to provide for fair and efficient administration of cross-border insolvency that protects the interests of all creditors. Because in this case, there's been a lot of US financial institutions that have also lent to Evergrande to basically go about their business and be the top developer in China. But of course, since a lot of these projects have been ditched and they haven't been completed, they have been behind on paying back their debtors. They've been behind on paying back their suppliers, their manufacturers. I mean, all the people that they've borrowed from. That's why they're defaulting. They're not able to pay back because a lot of the projects were never completed. So Chapter 5 bankruptcy protection allows a U.S. bankruptcy court to intervene in cross-border insolvency case involving foreign companies that are undergoing restructuring from creditors as well. And it aims to protect the debtors' assets and facilitate the rescue of businesses that are in financial trouble. So, and again, Tianji Holdings, an affiliate of Evergrande, also filed for Chapter 15 protection in Manhattan Bankruptcy Court, according to the filing. So this is definitely going to be a problem, not only for China, but a little bit in the US as well. There could be some financial contagion, which ripples into the US economy and the markets as well. And the property sector fallout. Evergrande's filing comes amid contagion fears that China's property sector troubles could spill over to other parts of the economy. There's another developer, Country Garden, which used to be one of China's largest developers, struggled to make coupon payments on their US dollar denominated bonds and issued a profit warning as well. So it's definitely not looking great. And Evergrande, for the most part, had a combined loss, a 2-year loss of 81 billion US dollars over the past couple of years after struggling to finish projects and repay suppliers and lenders, and net losses for 2021 and 2022 were 66.36 billion and 14.76 billion respectively. And as a result, the property write-downs, return of land, losses on financial assets, and financing cost is what the company said was the reason why they had significant losses. This right here is what Cathie Wood also talked about. This was August 15th, so a couple days ago. This is a part of a longer tweet, but she says, and I quote, "In our view, the Fed has precipitated and exacerbated the risk of a global deflationary bust, and the impact of its record-breaking 22-fold increase in the Fed funds rate could be hitting China first and spreading to the rest of the world." So obviously China is not doing super great. Evergrande, more specifically, as I said, is the second largest developer, makes up for 2% of China's GDP. Not to mention the property sector represents 30% of China's GDP. This can and will potentially, in my opinion, will slow down China's economy significantly, which could slow down the U.S. economy as well, because like I said, they're both, very, very significant trading partners, when it comes to products, goods, and services. And U.S. financial institutions also have made investments in China that could also be affected to a point where if these developers start defaulting, that is a risk for U.S. financial institutions, which could lead to financial contagion, increased volatility, and of course, not great news for the markets either. We do have the QQQs right now down a little bit over 27 basis points. I'm actually going to be doing another video going over some of the other reasons as to why the markets are pulling back here and seeing this correction at the moment, because the Nasdaq has certainly dropped, a little bit over 8% from its recent highs, which I consider to be somewhere between a dip and a correction. Anything over 10% certainly is a correction for the market. So we have seen pretty substantial drawdowns in the last 3 weeks for the markets. S&P 500 also has been selling off over the last 3 weeks, and SPY right now is down over 22 basis points as well. So we will talk about some of the other reasons in one of my other videos, but definitely wanted to go over this and how this is going to potentially affect the markets over in the US and even Chinese markets, for example. So Alibaba here down 2.5% at the moment, down under $90, definitely affecting Chinese stocks. If you take a look at Tencent at the moment, let's just come down to this right here is going to be on the Hong Kong listing, but it pretty much closed down 2.3%. NEO was down last time I checked, 3.5%. We got XPeng also pulling back down about 3%, and Li Auto also selling off here almost 4%. So we definitely do have the China ETF. A lot of the Chinese stocks are obviously selling off. So KEJI, there's no trades right now, but I'm pretty sure this one also is selling off pretty aggressively at the moment. So that's where we are, and keep a close eye on a lot of these risk factors, because there's just one more thing for us to worry about, I guess. But I hope you guys enjoyed this video. Let me know your thoughts down in the comment section below. And, what do you think about this potential catalyst here? There is going to be some increased volatility. Chinese stocks more specifically are selling off compared to their U.S. counterparts, but nonetheless, markets overall are pulling back and getting into that correction territory as well. So we've got another video coming out going over some of the other reasons as to why a lot of the stocks are dropping like flies here. So hope you guys enjoyed this video, found it helpful. Make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. 16% annual discount available till the end of this month. As always, happy investing. I'll see you all in the next video.